All right. So thank you all for attending the April Empowering Business Series. We're here with Tim Kehoe from ECDI and Paul Bryson from, they just said rebrand.
Legal Aid of Southeast and Central Ohio.
They're going to be our presenters tonight, and I will go ahead and expand our screen and hand it over to Tim. Once I find your screen. Um,
My name is Tim Kehoe. I'm the Director of Special Projects at ECDI. ECDI is the Economic and Community Development Institute, located throughout all 88 counties in Ohio on the main headquarters of we also house the Women's Business Centers of Ohio. We're really looking to help businesses launch or growth, open to business owners and gender. Business assistance across a wide variety of topics. ECDI.org if you're interested in more. For today, we are going to be talking through new reporting requirements for small businesses by the federal government. Some things to think about. This is not legal advice, this is generalized business advice. So if you have individualized questions about your business, whether it's eligible or whether it's exempt or non-exempt, you really want to consult a professional, ideally either an accountant or a small business. Go back one. So why we're here. So the Corporate Transparency Act passed by Congress in 2021, and then in 2022, the U.S. Department of Treasury's Financial Crimes Enforcement Network, or FinCEN as it gets referred to, published the rules that established the reporting requirements. The reporting requirements went into effect on January 1st. So why did they pass the new law? They said it's to combat money laundering and to a way to tie the business to the individual on a federal level. Currently, that didn't really have a way to have that happen prior to this. It didn't have a way to do that on the federal level. And so because it's federal, it's a requirement regardless of what state the business is located in. And this is a one-time requirement for the small business. However, you are required to update that filing if there is substantial changes to it. Some terms to be aware of. BOI is the benefit ownership information. The ID information for the individuals who either own the business or have substantial control. And then CTA, Corporate Transparency Act. That's what we refer to as the law that sets up. So some background. There's the four most common types of businesses in Ohio are sole proprietorship, where the human individual is the business, the one that's saying. There's limited liability partnerships, limited liability corporations, companies, and then corporations, S Corp or C Corp, so incorporated. The two most common that we see in small business are sole proprietors and LLC. And then the type of the business structure of the reporting company dictates the exempt or non-exempt status of that company. Again, there's businesses that are exempt from this requirement, and then businesses that are not exempt or they are required. So who will be able to view this benefit ownership information? It's not publicly available. It's not a website that anybody will be able to go and search. It'll be available to FinCEN, so the financial arm of the U.S. Department of Treasury. Federal, state, and local law enforcement officials, there's a mechanism where they can request information from this database. Non-U.S. law enforcement agencies also have the ability to request information from this database. And then financial institutions with consent of the reporting company. So if a business elects to have they're, as part of, say, a loan application, they elect to authorize the bank to request information from FinCEN directly. There's a new mechanism in order to that. There's no fee for filing the FinCEN. This is completely free. However, failure to report or register the business will may result in penalties of up to $500 a day, annual prison. They have said that this is not intended to be something that they, especially sort of early on, or go after. And this is meant to, they would be going after and penalizing people who are willfully disregarding the law, rather than somebody who was unaware of it and didn't. However, if you are becoming aware, if you do become aware of your requirement and fail to do so, there's multiple penalties to do this. And then please be aware of scammers and spam messages of businesses that are trying to get your business to hire them to do this on your behalf. This is very simple. It's very easy. You don't need to hire somebody else to do it. Okay. Understanding the requirements. Diving right in. So reporting companies are legal entities that have filed with the Secretary of State in the state that they're located in, like the state of Washington. This includes corporations, LLCs, limited liability partnerships, some nonprofit entities, some business trusts, and then foreign entities with doing business within the United States, doing business within it. Sole proprietors, again, this is where the individual and the business are one and the same. They are exempt from this requirement. They are already reporting their income and revenue as part of their personal taxes. So it's already tied to a tax ID number in the form of the Social Security number. So because the business and the human are the same, they already know who that business is. There are 23 other different exemptions from reporting requirements. This is a very small listing of those requirements. And so if you have a question about your specific business, again, consult with an attorney or a trusted business advisor who would authorize you to make this type of legal advice. Generally, companies in regulated industries like banking, insurance, financial advising, they already have to go through a pretty rigorous licensing requirements that establish who is the business owner. So the federal government already knows who that is. Large domestic corporations with greater than 20 employees will file taxes that show that employment are not required. Inactive businesses from before January 1st of 2020 with less than $1,000 of income or costs since that time are not required to register. These are considered inactive. However, if that business ever does become active in the future, you would have to immediately then satisfy the reporting requirements. Tax exempt nonprofit entities with a 501c3 are exempt. So if they're in existence and they're an existing nonprofit. However, if you are starting a new nonprofit, there is always a period of time from when the business gets started until 501c3 status is achieved. During that period of time, the business is technically a for-profit entity, and depending on the other formation business structure, may be required to satisfy these reporting requirements. So there's a scenario where if you're starting a new nonprofit, you're going to have to satisfy these reporting requirements, but then go back in and update it when the 501c3 status is achieved. So who is a beneficial owner? So it's anyone who is a 25% or more owner of the business, and then anyone who has substantial control of the business, senior officers, those with authority of appointment who can remove officers or boards of directors, and then determines or has influence on the business decisions, especially in regards to the ability to sell assets or take on debt. So some examples of these that may be considered a beneficial owner would be a president, general manager, executive director, CEO. So there's lots of different kind of determinations on this. you're gonna want to make sure that you understand your business well enough to make this type of determination. What is a company applicant? So this is going to take place in the future. Any business registering after January 1st of 2025 will have to complete this step. This is companies similar to if you were to hire an agent to register your LLC with the state of Ohio. They get listed within that registry, within that file. A company applicant after January 1st, 2025 will be much very the same. You will be able to hire somebody to or appoint somebody to complete your registration, your FinCEN registration on the company's behalf. After this point, that individual will have to establish who they are as part of your registration. And so if you have a small business attorney that's going to complete this on your behalf, I guess effectively they will have to establish as part of the filing who they are as a human. And if one person is already filing, then the only person is primarily responsible for the business. So the BOI report. What's all included in it? It's the name of the company, along with any DBAs or any trade names. The jurisdiction of the business, so the state or the country where it's located. The current street address of the principal place of business, so they're looking for a physical address, not a PO box. And then the taxpayer ID. And so when you duly log on, you can see these fields, and it has a way to capture each one of these data points. The business owner's information is the full legal name, the date of birth, current residential address, so that's the street where they live, street address where they live, and then a unique identification number from an acceptable ID document, plus a copy of that ID. One of the simplest and most straightforward is a driver's license number or a state issued ID number. Many people have those, and so it's one of those that's most easily accessible. The company applicant's information, again, it's a typing, it's after 25. The full legal name of the company applicant, so that agent is acting on the business's behalf, their date of birth, their residential address, and then their unique ID number and a copy of that ID as well. So much the same as the owner's information, they want to know who's making that registration on behalf of them. The deadlines. Any existing business that was in existence prior to January 1st of 2024 is required to register by January 1st of 2025. So sometime within 2024, this whole year to register. Foreign companies that come into existence during 2024 have 90 days from coming into existence to register. And then companies that come into existence after January 1st, they must file the initial report within 30 days of creation. And then reporting companies with changes. So it's anticipated that over time your business may change, it may become a 501c3, it may bring on new owners. And so whenever that is, whenever any of those changes or are discovered, so it's even written so that they realize that people may inadvertently not know that they missed a requirement. They give you 30 days from that point to update your file. You're going to see something up here called FinCEN identifier. So for individuals who have multiple businesses that they need to register, they can complete their own individual register the BOI information one time, receive what's called a FinCEN identifier. And then that FinCEN identifier can be entered in each one of those individual business filings. So right now, if you register one business, you have one business owner's filing. You can essentially do all of the same requirements of that, the business owner information filing. You do that one time with FinCEN, and then you get issued this unique identifier. So there's not really a benefit in doing it if you only have one or two, but if you have multiple LLCs, for example, it can be a time saver because you're cutting the amount of data that you have to enter, which isn't much, for each one of the applications. Okay, submitting the report. Again, do not pay anybody to do this on your behalf. It is something that if you have access to a phone, computer that has access to the internet, you can do this. You'll go through, also do not go through any third-party websites. You want to go right here. boiefiling.fincen.gov. If you Google BOI FinCEN, takes you right to it. But make sure it's got this .gov. That's the website. Yes. You can get started right on there. It's pretty easy. You'll go to BOI e-filing, click Get Started, and it takes you through the process pretty seamless. You have the option to do a paper PDF file. I would advise you not to do that. It's slow and error prone. You do have to send it in, and you don't really control much through the process. Plus, the e-filing is very, very easy. So once you click on that, it takes you to this page where it makes you step through the information that it needs pretty seamless. So the type of filings that you have, initial report, correcting a prior report, or updating a prior report, or if your, let's say your business gets its 501c3 status, you would be then immediately exempt entity. And so it preloads the date, gets you to the second tab. This is the reporting company information. And so name of the business, trade names, and then what type of tax identifier it has, and then that tax ID number itself. Really simple, straightforward. If you have your business formation information, if you have your EIN handy, take it. So this is that company applicants page. For many people, this is not something that's going to need to be a part of it. This is more of a setting up for future capabilities. So for right now, it's pretty much automatically selected through. When you select to push beyond, this page is you don't have to enter in any information about you to select through. It sends you over to the beneficial owner tab. This is where you'll have, this is probably the most information that you have to enter. It has the actual individual's names, their address, date of birth, and then your identifying documents, what the number is, what the jurisdiction of the ID issuer is. And it's got lots of different types of available documents. Once you enter those in, you drag an image of that ID document to this folder, and it automatically uploads. And then you'll hit next on each one of these tabs, and it takes you to the final page of the e-filing where you certify that this is true and accurate. You want to make sure that you're registering information with the federal government. You want to make sure that that is obviously true. You're not misrepresenting anything that your business has. You click that little I am a human button to make sure that you're not a robot, and you click submit BOIR. And it's that simple. If you have your tax identification information and a copy of your ID that you can take a picture of, it took you longer to listen to this presentation than it will be to do the process. You have to register with FinCEN. You have to have an email address to do that, but it's not hard. You have to authorize that email address. Really what they're trying to get to is understand, okay, we have a business filing. Who owns that business? Who's getting the income, the revenue, and the expenses of that business as part of their income?
Mhm.
So previously, the federal government did not have to do that to tie an LLC and an EIN directly to a tax filing, unless that tax filing. So this is their mechanism for tracking those down. So if you have been hiding money in an LLC somehow, then probably not going to want to do that.
Moving forward, 2025, is there going to be more of a streamlined process, or will you always have to update it through this particular portal?
Just one time. So
Okay.
unless there's a change to it.
Mm-hmm.
So you registered this one time. If you were to take on new owners, eliminate owners, so let's say you, partner gets kicked out.
Mm-hmm.
Or if there's a substantial change to the business, so if it moves,
Mhm.
or if somebody who had substantial control, but was just an employee gets fired, like if the business, the president wields all the power, makes all the decisions, but he doesn't actually own the business. And then that president gets fired and ownership steps,
Mhm.
then if they were included as part of the BOI information, you would need to update it and exclude them.
Okay.
But if there's no changes to the business, you don't have to update it. It's just a one-time.
Okay. In an instance like an S corp, where you would have that kind of dynamic that you just described, is there anything that somebody who is leaving an organization would want to do to protect themselves in this situation?
I think you would want to understand if you've ever been listed as a BO
Mhm.
for a business that's being managed. And you would know that because they would have to, in theory, get a copy of your identification in order to do it.
Mhm.
And so in that scenario with the president, I'm assuming that they would be made aware that they had been listed as. And then upon that scenario, we may want to work to ensure that they're removed from it. So that they're no longer tied, or if they resign and want to get out and they know that they've been listed as a BOI, I can, I can see a benefit of getting yourself removed as a listed. That's an interesting scenario, but yeah, you would have to be aware that you were listed as one.
Mhm.
So.
So short of being asked for an ID, all the beneficial owners aren't getting notification.
Yeah,
It's just,
yeah, because it's assuming that as the BOI, you're the one configuring. So I guess in a scenario where a business manager knows that this requirement needs to get done, fills out that information based on the information that they have through HR
Mhm.
and satisfies it. But keep in mind, a lot of businesses that are in that scenario where they have a president that is wielding significant power, that's not ownership, like, are they already satisfying an exempt because they have more than 20 employees?
Right.
And they're already tax funded. And so in that scenario, it's likely that they're not completing this step by step. They've already become exempt. And so this is really meant to capture those small businesses that are a lot of times cash-based businesses,
Mhm.
ones where they're trying to get down to the transactions of the individual businesses. Those types don't lend themselves to non-owner managed businesses that have significant control.
Mhm. Great. Thank you.
I wanted to clarify something you said earlier about nonprofits, 501c3s. So you said that in the interim between them forming the organization and getting this 501c3 status, if they had revenue greater than $1,000, they would have to report. But
If they're the registering of the entity
Uh-huh.
is the triggering event now.
Okay,
The requirement for the 1,000, the minimum of 1,000 is only for prior to January 1st of 2020.
prior to January 1st, 2020. So if you had formed an organization at that time, and it took you like 6 months to get your nonprofit status, but yet you did not realize any revenue in that interim, then you would not need to report.
Well, so there's kind of two scenarios on the previous date, January 1st of 2020. You would have had subsequent years where your 501c3 would be established as of today. And so you would, in that scenario, wouldn't be required. You would be exempt because your 501c3 would have been long in place. In the scenario of 2024,
Mhm.
a newly registered entity doesn't have to achieve 1,000. The registration is enough of an entity.
Okay,
And so if you, that's kind of the one of the strange things. So If you registered a business on December 31st of 2019 and never earned $1 or had an expense, that business, in theory, does not need to be registered. If you registered an LLC on January 2nd, 2020, and that business did not earn or spend $1,000, that business still needs to be registered. Because its registration and its activity happened after January 1st, 2020. And so then today, there was that period of you register the entity to be incorporated. And in the amount of time they can describe of that 6 months that it takes to achieve the IRS designation in the 501c3, then they would be registered as this. And then whenever they get that status, they'd have to go in and update that they're no longer, that they're now exempt.
Okay. So Paul, in that situation, it sounds like the SID would need to.
So that's something that, we should talk about. So
Yeah, it sounds like there could be a.
there'll be a couple of things here, and I'll go ahead
Yeah.
and come up here with you.
Yeah.
So I don't have a ton to really add, because this isn't meant to be like a dramatic change in the law for people. It's not meant to be, Congress didn't mean this to be dramatic, and sometimes they don't mean it to be, and it is anyway.
Yeah.
This is one of those
That never
situations where I think they might have kind of gotten somewhere close to right.
Okay.
So part of the answer here is going to be that, that series of time periods. You know, you saw organizations that existed at a certain point have all year to get the registration done. You know, if they were created during this year, they have 90 days to get it done. If they're created next year in 2025, they'll have 30 days to get that registration done. For nonprofits, since that's kind of where we started here, when I stepped over, a lot of nonprofits are going to file and get their 501c3 retroactively, back to the date of their creation. And so for a nonprofit that did that, they don't have a period where they existed, and were not recognized under 501c3, because although they did in reality, like if you took a video camera, in legal terms, they did say they were created January 1, 2022. And they applied for their tax exempt status, their 501c3, December 30th, 2022. And they asked the IRS to give it to them up to 27 months, up to the date of creation. They had their 501c3, if the IRS granted it this way, as of the date that they were created, which means that they don't fall into a period where they would have to report.
Interesting.
The real issue is going to be with organizations created in 2024 or 2025, or ones that didn't get backdated for some reason.
I see.
And that is because you ask the IRS for tax exemption, it's gonna take more than 90 days from the date that you're created, almost certainly. If you're filing the long form, it definitely is. If you're filing the short form and you have managed to ask for that in a short enough time that they're granting it that quickly, I'd be a little surprised, and I would like to talk with you about your process. But for the most part, you're gonna have that gap. And then next year with that 30-day gap, that's when it's really done. So I think a lot of times in terms of workflow, rather than what the law is, I think what procedure have I set up to make sure that my clients are complying with the law. It's going to be, I get them on, I register with the Secretary of State, I get their EIN, then I go and get them on BOI.
Mhm.
That's just gonna be, get them on FinCEN, that's gonna be my workflow. And I think that that's what most people are gonna find themselves doing as they go through. And for me, next year, I'll be one of those company agents. I'll just do it that way. It'll be nice for people who are creating more than one company or have lots of companies, because they'll get that FinCEN ID. And then instead of filling in that information, I think you saw it was up on the left-hand side here, it asks for that ID, and then it's just gonna autofill everything else as people go along. And then soon somebody will script an AI program that'll do everything except hit the I am human. And I think we'll find that being a lot easier.
If I'm not mistaken, there's really no penalty in applying and then realizing you didn't need to apply, correct?
No, if you applied and you said, hey, Joe Blow is the guy who owns this company, but really it's Susie Schmo, and you were trying to cover for her, then you get a penalty.
Right.
But if you register for it and it turned out you didn't have to, or you were exempt all along, there isn't a penalty for that. So it's, the penalty is not doing it all with notice that you should, with knowing you should do it, and doing it falsely, not messing it up, especially by registering when you didn't have to.
Right.
As time goes on, they're gonna end up creating more and more improvements to the process where you don't end up accidentally registering, or a pop-up comes up, it's like, hey, you really think you need to? And we'll get there, because that's the improvements they make over time, but I don't think we're gonna run into that anytime soon.
Great.
There's some of that that's built into it already. Like if you go and try to, if you're a sole proprietor and you go to try it pops up and it says like, I forget what it is, a little red box and red text pops up and it says that you're sole proprietor.
If you put in a social security number.
Yeah.
It'll pop up and say, hey, that's a social security number, you probably don't need to register here. Because if you're putting in a social security number for a business, then it probably doesn't have you have messed up if you have a separate existence from you and you're putting in the social. Something's gone.
That was gonna be my question, because you said a sole proprietor filing taxes under their own social security number. They do not. If you have an LLC and you're the sole member and you file taxes under your social security,
It will still have you register. Because it still has a separate legal existence. And because you can, at any time, opt
Add
to start doing that, add members, or start having it report. It's a disregarded entity, but you could at any time change that. So some of what helps me with this is to remember where it came from. This all came out of the Panama Papers. That may be something people have forgotten about. It was a big upload of 11.5 million legal and financial documents in 2016. It's where you found out, oh, this rich person is using this tax loophole, and this famous person has 14 LLCs, and that's why it looks like they haven't really made any money, when really we know they have lots of money. That's where this all came out of. So that's the kind of activity Congress is trying to capture. They realized, oh, wait a minute, we have many jurisdictions out there where people are creating these entities. They're not reliably attached to any one name. And the government looked around and said, we can't figure out how to tie all these things together. So how do we do that?
Mhm.
And the way they came to do it was through, hey, if we make the people, where is the money? Who does the money go to? Who gets to use the money
Mhm.
is really what it's all about.
Yeah.
And that's why it's within the financial crimes network.
Mhm.
Because the government wants to be able to look and go, we're investigating, I'm gonna pick on somebody we all assume will be innocent of everything, Keanu Reeves. You know, we're investigating whether Keanu Reeves is committing tax fraud. Let's find out everything he's tied to and make sure he's reporting all of his income. We all know that he's great and plays great bass guitar and loves dogs, so there's no way that Keanu Reeves is committing any financial crimes. But that way, if the IRS or the Department of the Treasury, the FBI is worried, it's easier for them. So for those of us who have, small businesses, LLCs, this will be the super easy process that we just talked about. It'll be, hey, I've got this company, here it is.
Mhm.
Where it'll change, you add somebody, you bring on a partner. They probably have more than 25% interest, so you're gonna, add them to this registration. You get rid of a partner. You sell, that'll be part of your sale documents now of who's gonna update the BOI.
Mhm.
I have a slightly different answer to the question about if you're a controlling person and you've been reported on BOI, do you need to do anything about it? No, not really, right? It doesn't hurt you to be listed there if you don't actually have that controlling interest. Except if you think the company that you worked for and have that controlling interest is doing something wrong.
Right.
In which case you want to get your butt taken off of there before the IRS comes knocking on your door.
Right.
Or the FBI does. But you may not, you don't have like an obligation to update it right away. It just may be in your best interest.
Yeah.
Which maybe isn't as different an answer as just kind of a more, I don't want you to worry answer.
Yeah,
Mhm.
well, and I think that second part of that, the IRS and the FBI, I mean, that's ultimately what this is trying to do. They're trying to be able to find okay, we know we received a 1098 with this business entity on it. We never got a tax return where that was on a Schedule C.
Mhm.
They're now gonna look, okay, is this person registered with FinCEN and who's the ID that it's attached to? Let's go find that individual, their tax filings, and make sure that this is included. They lacked the ability to identify those missing.
Yeah.
This is a law that is intended to shine a light into, it's still, it's a self-requirement. And so that's where the kind of the law portion of it maybe isn't necessarily spot on, and it's still requiring a small business owner to be the one to do it. And so you'll have the truthful ones that will do it, and then, but they're closing the door on the ones that aren't truthful. And they're trying to seek those out, and eliminate those, and get those into the same taxes that we're all having.
Yeah, well, and they're closing that loophole. They're also creating a situation, you know, you may have heard Al Capone didn't go to prison for bootlegging. He went to prison for not paying taxes on his bootlegging. That's really the loophole they're closing,
Mhm.
is if they can't prove someone committed a bunch of tax fraud to the extent that they did, but they can prove that they never registered these beneficial interests,
Right.
that'll be the thing that they can get somebody on.
Mhm.
Or that will be what they'll get somebody on to get them to plead guilty and cooperate against somebody higher up the chain who really did commit a bunch of tax fraud. That's what this.
So to that second point of, if you're attached to a business that you think might be audited at some point, then that's when you would probably want to remove yourself from it, because then all, I mean, even if you had nothing to do and it would just be to avoid being part of the investigation. But even if you were above the board the whole time, by removing yourself, you would in theory remove your tie to a future.
Yeah, I mean, they'll still probably come and ask you questions if they're looking that
Of
intensely,
course.
but they might ask you those questions a lot more friendly
Mhm.
than if they think you're still involved.
Correct.
Yeah, I think, and I don't know, I've gotten paid off of people getting friendly questions. So if
Yeah.
you're the person representing them, it probably seems less threatening than if you're the person in the chair getting questions asked. So take that part with a little bit of a grain of salt.
Yeah.
I don't have a ton to add to that, really.
Now, for folks who like their anonymity and that's why they have a LLC, is this something that the average person can look up information? How is that accessible, if at all?
No, it's basically, it's like, it's a warrant type of situation. They have to apply to FinCEN and justify the reason why they're seeking the information. And so law enforcement agencies, that would be easy to do. Other government agencies, I'm sure it'd be easy for them to do. But it's not searchable really to the public in any way. It's really not even searchable to financial institutions or insurance companies or anything like that. It's you, in order for your information to be disclosed, you literally have to sign an authorization, like getting a credit pull. A lender can't automatically do a hard pull on your credit unless you authorize it. There will be a similar scenario with this where you could authorize a financial institution to reach out to FinCEN with your authorization for FinCEN to confirm their information. So there's a mechanism to do it, but you're in charge of what entities, lenders would be able to.
And realistically, what they're going to be doing that for is to verify that you have that, one, if they're going to lend to you, you've complied with this requirement and you're not going to
Yeah.
get their money in trouble by not having complied with it.
Yeah.
Two, that you're really the person they should be dealing with.
Yeah.
And three, whether there are other people they should be dealing with. It'll be much more of an underwriting tool
Mhm.
on their end to make sure that they're making a safe loan than a credit checking kind of tool. To make sure that they're making a loan that's gonna get paid back.
And this has already happened. Lenders are already doing this. This is just another tool in the toolbox that they're doing, and in all honesty, that most lenders are doing. They're verifying that they do it with the IRS with your tax filings. So they request tax transcripts that you again have to authorize for them to do. What they're just verifying that the information you supplied to the lender is what you also supplied to the federal government, to the IRS. It's a double checking tool rather than it's example business LLC is some business that just bought a home in my neighborhood,
Mhm.
you won't be able to go and see who on the fence and see who owns example business LLC.
Right.
It's not gonna work for me.
And frankly, if you think that your LLC gives you any kind of meaningful anonymity from people who want to find out who you are, you're kidding yourself. People I work with sue LLCs all the time, and when we need to find out who's behind them to figure out where to get the money from, because we've managed to pierce the corporate veil, we figure it out. The people selling you LLCs are telling you that it's giving you anonymity.
Mhm.
But they're being generous in saying that it gives you anonymity.
But how did Franklin, or I think it was Prairie Township, couldn't get to the owners, the LLC that owned Galloway Ridge?
Mm.
So part of that, is they haven't established all the claims they would need to establish to get to personal liability for the owners yet. And we may see them do that depending on what things happen in that case afterward. The other thing that happens in those is a lot of those equity firms that hold those, it'll be an LLC held by another LLC, by another LLC, by
Okay.
another one, and maybe has 100 members. And so it's a matter of they haven't figured it out yet, not if they need to, they won't ever figure it out.
Mhm.
Okay.
Yeah, it creates lots of walls. I think about it kind of like a fantasy fortress, right? The orcs have to bust through 10 or 20 walls before they get to the treasure inside.
Yeah.
Yeah, the government has enough power that if it really wants to, it can bust through lots of walls to figure out who you are.
Great.
I know that you asked me to mention that some resources, and I know you've got some too. So if you haven't been there yet, the main library, with Columbus Metropolitan Library branch, is the main branch on the 3rd floor, up in the big bright corner. Up there has a business and nonprofit resource center. I am up there every Wednesday morning from 9 to noon, kind of taking whoever comes in and doing some free legal consultations with them, be legal information, not legal advice, but also doing an intake to see, for the people who do need some follow-up. And I know your group is.
I'm not sure exactly what day of the week it is. I think that changed recently with as of April 1st, but they're hosting regular sessions there. We're also, the library's hosting kind of a startup series where it's, weekly based, and you get to start a business plan, you get a business model here, that's kind of that turning your business idea into a functional reality. And so they have full work style as well.
That same program is also coming to the Hilltop Branch Library. And for anyone who's interested, see if I can hold that out far enough. The deadline to apply is May 16th. So if you want that same service in your backyard, that will begin in May and run through June.
Some of the different branches. It's one of those things where, like, if you miss out on this May, I don't think that's the last time you're gonna get a chance to do it at this point.
That's a program where the library, it had existed for several years, and the library has the program now, where it got it after another nonprofit stopped doing it. So it appears that program is going to exist for years down the line.
Yeah, great. All right. Well, thank you both for joining us. This was a wonderful presentation. I hope that helps some folks out. So thank you again.
This was good.